Have you heard the latest shockwave coming out of Europe? We were talking about a potential 1.7 trillion move that could completely upend the global financial system. Strap in, because this isn't just another headline. It's a warning shot that could impact everyone's wallet from Wall Street to Main Street. So, what's going on? There's growing chatter that the European Union might be considering a massive dump of its US Treasury holdings. That's right, $1.7 trillion worth of what has long been considered the world's safest asset. Why would they do this? It all stems from a controversial idea being floated in Washington: seizing Russia's frozen assets to fund Ukraine. Now, regardless of your stance on the politics, the financial implications are staggering. If the US sets a precedent by seizing another sovereign nation's assets, it sends a chilling message to every other country holding US dollars and treasuries. The unspoken rule has always been that these assets are untouchable, a bedrock of global finance. If that rule is broken, trust evaporates. Imagine you're a foreign country. You see this happen and you think, wait a minute, if they can do it to Russia, what is stopping them from doing it to us if we have a political disagreement down the line? This creates a massive crisis of confidence. The EU, holding a colossal $1.7 trillion in US debt, would be one of the first to get nervous. Their logical next step? To de-risk, to sell off those treasuries before they potentially lose value or become political pawns. And if the EU starts selling, who's next? China? Japan? Saudi Arabia? We could see a domino effect, a global fire sale of US debt. This isn't just theoretical. It's a real and present danger to the US dollar's status as the world's reserve currency. When there's a rush for the exits, what happens to the price of what everyone is selling? It plummets. A massive sell-off of US Treasuries would force the US government to offer much higher interest rates to attract new buyers. Think about what that means for the American economy. Higher interest rates on government debt would translate to higher rates for mortgages, car loans, and business loans. It would put a massive strain on the federal budget, as more taxpayer money would go just to paying interest. It could trigger a recession, or worse. This potential crisis highlights a fundamental weakness in our current financial system. It's built on trust, and that trust is looking incredibly fragile right now. For decades, the world has relied on the US dollar as a safe haven. But if the safe haven itself is at risk, where do people turn? Where does all that money go? This is where the conversation gets really interesting and shifts towards new territory. When faith in traditional financial instruments wanes, investors start looking for alternatives. They search for assets that are outside the control of any single government, assets that can't be frozen or seized with the stroke of a pen. Enter Bitcoin. For years, proponents have called it digital gold, a decentralized store of value that is resistant to censorship and political maneuvering. Its supply is capped at 21 million, making it inherently deflationary, unlike government-backed currencies, which can be printed into oblivion. Now, let's be clear. Bitcoin is volatile. It's not the same as a US Treasury bond. But in a world where the safety of even government bonds is being questioned, the argument for a non-sovereign, digitally native asset becomes incredibly powerful. If even a tiny fraction of that 1.7 trillion, let alone the trillions held by other nations, starts looking for a new home and considers Bitcoin, the price implications are mind-boggling. We're not just talking about another bull run. We're talking about a fundamental repricing of what a global neutral reserve asset is worth. This potential move by the EU isn't just a political chess game, it's a financial earthquake waiting to happen. It forces us to ask some very uncomfortable questions. Is the era of US dollar dominance coming to an end? Are we on the brink of a major shift in the global monetary order? And in this new, uncertain landscape, is Bitcoin the only true safe haven left? Think about it. The world is built on a financial system where one country's political decisions can destabilize everyone else's wealth. For the first time in history, we have a viable alternative, an escape hatch, an asset that operates on a global open network, secured by mathematics, not by politicians. The very possibility of a $1.7 trillion treasury dump is the biggest advertisement for Bitcoin imaginable. It's a real-world stress test that reveals the cracks in the old system and shines a massive spotlight on the new one. It tells every major fund, every country, and every individual investor that they need to have a plan B. And for a growing number of people, that plan B is starting to look a lot like Bitcoin. This isn't just about making money. It's about preserving wealth in a world that is becoming more and more unpredictable. The financial ground is shifting beneath our feet. The question is, will you be standing on solid rock or in sinking sand when it all gives way? The decision by the EU, whatever it may be, could be the trigger that forces everyone to answer that question, and fast. The great de-risking might have already begun. Thanks for watching. What are your thoughts on this? Is the dollar in real trouble, or is this all just fear-mongering? Let me know in the comments below. And if you want to stay ahead of the biggest financial shifts happening in the world, make sure you subscribe and hit that notification bell. We'll see you in the next video.